welcome to today's live stream. On this episode, we are continuing a series where we're sharing key insights from one of the leading transportation industry resources, the U.S. Bank Freight Payment Index. We're also going to be gaining key takeaways from the Freight Payment Index from business leaders that know it better, much better than me and Mr. Greg White, who is my co-host here today. Greg, good afternoon once again.
Yeah, good afternoon. Good to be here.
Hope you're doing well. Quick programming note for any of those that enjoy our live stream. Of course, you can check out our podcast wherever you get your podcast from. So, Greg, we've really enjoyed this series in partnership with U.S. Bank. We've got a great guest analyst here today, and we'll introduce our two guests momentarily. But first, a couple thoughts from you. You know, clearly, U.S. Bank's one of the leading financial institutions that makes global supply chain happen. And, of course, a big part of that is the backbone of global supply chain, the transportation industry. So share a couple thoughts as we open up here.
Yeah, over $28 billion a year in transactions. So even when we told Lee that, even Lee went, So that's clearly an impressive and significant amount of the transactions. So using that really valuable data to bring insights around transportation, I think a lot of people suspect what the topic main reasoning will be, but there are a few surprises in this report, which we're going to talk about here in just a little bit. One other quick note, our very first live stream was with U.S. Bank, and we've been talking about that for the last couple weeks. And I feel like we've already started this one much better than we started the last one.
I'll tell you, we were sweating bullets for a little while there.
We were.
You don't want to mess up a live stream, but we have come a long way since then, and our audience has come right along with us. We've seen, really appreciate the high levels of engagement we've seen both in the moment during the live stream, and of course as the interview gets published and is consumed around the world. So with all that said, let's welcome in our distinguished guests here today. First up, Bobby Holland, Vice President, Group Product Manager, and Director of Consulting Services at U.S. Bank. Bobby, how you doing?
I'm doing well. How are you?
Doing fantastic. Great to have you back. Your thought leadership from the first one back in January was very well received and consumed, and great to have you back as we dive into the Q1 Freight Payment Index shortly.
Excellent. Thank you.
Real quick, before we introduce our co-featured guests here today, I want to say hello to Patrick Kelly and Paul Jepson. Thanks for joining us here on the LinkedIn live stream. All right, so joining Bobby and Greg and myself is back third time's a charm is Lee Klaskow, Senior Analyst, Transportation and Logistics with Bloomberg Intelligence. Lee, how you doing?
I'm doing well, Scott. Thanks for having me, and thank you, Greg, for having me as well.
Yeah, welcome back. Good to see you.
Our audience
in Austin, I think, right?
Yeah,
that's right. Well, our audience demanded it, Lee, by the way. So we really enjoyed your practical, no-nonsense, been there, done that analysis in the first two episodes. And it's great to have you join Bobby as we dive into an outstanding informational bit of research that U.S. Bank provides. So with all that said, before we dive into the Freight Payment Index, Greg, we probably should let our current audience get to know Bobby and Lee a little better, right?
Yeah, maybe so. What could it hurt?
That's right. Not at all. So, Bobby, starting with yourself, tell us a little bit about where you're from and just in a nutshell your professional background.
I'm originally from California by way of Colorado. From a professional standpoint, I have a software engineering and software architecture background. Came to the bank a little over 3 years ago, looking at ways to develop freight or data-related freight products. And so with our freight audit and payment system, the Freight Data Solutions team was born. And that's basically where we are today. The Freight Payment Index was our first published product, and many more to come.
Yeah, and it seems like it's resonated, and it's really caught on within the industry. Want to say real quick hello to Peter and Jarrell, who's also both of these folks, along with Bosco, are all on the LinkedIn live feed. Thanks for joining us, gentlemen. All right, so Lee, same question to you. Tell us a little about yourself, where you're from, and just like Bobby did, your professional journey in a nutshell.
Sure. I'm from the great state of New Jersey. I'm working for Bloomberg Intelligence, which is Bloomberg's research arm. They have over 280 analysts globally covering industries and companies from an equity, credit, regulatory, and economic perspective. I've been at Bloomberg for, I guess, about 10 years in September. So it's been a great journey. I cover freight, transportation, logistics, and so that's pretty much all modes here in North America. And I also do air freight and marine shipping globally with some of my partners in Asia and Europe. And then before that, before joining Bloomberg Intelligence, I was a sell-side equity analyst. Most recently, I was at Prudential Equity Group and Longbow Research covering the space. And then prior to that, it was like 6 years of investment banking experience. So that's me in a nutshell. So there you go.
Well, I tell you, between podcasts, live streams, keynotes, webinars, and walking the dog, it is tough to get some time from Lee Klaskow. So great have you back here, and looking forward to some of your color commentary on the data that Bobby and the team have assembled. So with all that said, Greg, let's kind of set the table a little bit.
Yeah. So let's kind of connect the dots for the audience and make sure everybody understands how this data is constructed and analyzed, Bobby. And let's start with, how have you constructed this highest level to create such a good source for freight data for the industry?
Well, like I said, the source data comes from the transaction processing in our freight audit payment system. And basically we do a quarter-over-quarter comparison, same-store sales type algorithm to basically determine the change in velocity of our shipments and our spend through our system. And so we measure how fast or how much slower the rate of changes in our shipments and freight expenditures. So you find that these two are because they are taken from trucking and less than truckload, which is comprised about 80% of our data. It's with the way that we process and create the index, we find it's a good indicator of the trucking market in general. So what you see reflected here with our shipments, the quarterly percentage change, and in both shipments and spend, again, that's our extrapolation of the market.
Okay, great. I think that helps people get a baseline for how the data is collected, analyzed, and constructed. Give us a bit of insight, Bobby, on how your clients and other people in the industry use the freight payment index.
Well, we find that providing a national overview as well as a regional overview, we start at the top level, and our customers are able to look at the data and measure themselves in comparison to that, see how the market's going. Again, it's not supposed to be the end all and be all of the viewpoint, if you will, but it's an important viewpoint, and customers can add that to the body of data they're already working with. They're looking at their own data, first of all. They're looking at other indexes, and they're looking at our index. And that enables them to build a comprehensive or more complete picture of the trending in the marketplace. And we want to make sure that it's well represented. And I think the regional aspect kind of gives more detail just below the national as to the unique challenges that each region faces. And you'll see and reflected in the numbers that there are some differences.
It really gave us some good perspectives last quarter when we analyzed this, where we saw some regions of the country were substantially more increased than others in a quarter that was already down year over year from the previous year, right? So I think that regional breakout becomes really valuable. And I think as we talk through this, we're going to see some significant differences region by region yet again. So interested to get to that. Lee, I know you look at a lot of indices, a lot of indicators, a lot of analytics tools around transportation. So tools like this, or maybe even the US Bank tool itself, tell us what you see people using it for.
Yeah, so I think it gives people a good idea about what happened in the previous quarter. where people can benchmark that against where they think things are going. Because in my line of business, it's more about trying to look forward and using the information that we have, which is information that's happened already, to try to predict the future as best as we can. It's interesting to see some of the numbers that were positive. I would guess that on a monthly basis, that late March, a lot of that demand probably fell off a cliff from some of the information that we see through channel checks or from companies that have recently reported earnings.
Yeah, and I think we're going to see, we're already seeing reports of what's happening in April as well. But there were actually some surprises in this for me in terms of where the uplifts were, where they continue to be even into March. And I think we're going to talk about it, but it has a lot to do with the industry that you're in. So, we don't have any audio from Scott.
Here we go. The mute button was on. I feel like it was a typical conference call bingo moment. Hey, the folks from LinkedIn, we got a couple of quick shout outs. First off, our friends Nick from EFT by Reuters Events is asking Greg what the whiteboard message is. So Greg, maybe we'll have to put something back there. Also want to
U.S. Bank is a really, really official organization. I was frankly a little bit afraid to put something too witty up there.
I'm with you. Also,
my great uncle used to tell me,
we're funny.
Twit is only one letter from twit. So,
Teresa with the Tauber Institute joined us for our previous live stream. She's back. So hello, Teresa. And she also has a lot of bright students that are looking for projects and internships. So check that out, the Tauber Institute, Tauber. And then, of course, Claudia Freed. What would a live stream be without Claudia? So, Claudia, thanks for joining us once again, and we're looking forward to your insights today as well. Okay, so moving from there to Bobby, we're going to dive right in, and let's start at the the national point of view. We're going to throw up the kind of the main graph here that shows recent history from a national standpoint. Give us some initial observations nationally of what the Q1 freight payment index showed you.
Well, as you can see from with shipments, we're down 1.8% quarter over Q4 2019, but we're actually up 3.8% over the similar period last year, Q1 2019. A lot of freight movement. It's just it's a mixed bag as we'll go through and we start talking about the commentary. And from a spin perspective, both of them are down, 3.7% quarter over quarter and 2.5% year over year, which is reflective of the fact that, that we're in the state that we're in right now with the virus and all of the resultant impacts.
Yeah, certainly no shortage of factors that are impacting transportation rates and a lot of other things within supply chain. Lee, let's go to you next. Just from this national point of view, you were talking a second ago about the March dips. What was an early observation for you from the national scope?
Yeah, so we track weekly spot market supply and demand through data from truckstop.com, which is a load board. And the kind of the surge that we saw in demand due to stay at home kind of mandates for people, the big rush and obviously delivering essentials, medical equipment, medical supplies, toilet paper, beer, the essentials to be staying at home. We saw that kind of like fall off a cliff probably like the week of March 20th. So there was pretty good demand in mid to late February for a couple of weeks, and then it just kind of went away.
Yeah.
And what we're seeing now in April is that to continue to decline, the trucking market getting softer again, rates going down. Rates are down around 6% year to date on the spot side, excluding fuel surcharges. So that's kind of what we're seeing as of right now. And most economists that you speak to, they're expecting a lot of doom and gloom in the second quarter. I've seen estimates, GDP down 35% in the second quarter. So that's a lot of demand destruction that we're heading into.
Real quick about fuel surcharges, we're getting a comment from Patrick Kelly, who's also a podcaster focused on that space, the food industry space. He says, I've noticed that there are no fuel surcharges anymore in California and now getting fuel credits. That is always a plus. Good stuff from Patrick. Also want to give a shout out, Mr. Supply Chain himself, Daniel Stanton's part of the LinkedIn audience. Daniel, hope you're doing really well, sir. Great to have you here. And I had one other comment. Jarrell is a business leader in a leading food retailer. So clearly that we've got a strong presence in the food industry space here on today's live stream. Greg, a date, Lee mentioned the date March 20th. As you and I have talked about on a variety of shows, that right after Modex wrapped up, it seems like here in the States, everything changed.
Yep.
That those middle 2 weeks in March. Speak to that a little bit.
Well, I think that's when the realization sort of hit that things were going to change. And I think many people, even though a lot of the quarantines and the mandatory stay-at-homes and shelter-in-place orders had not gone into place, people saw it start to happening. And that's when we started to see some of the panic buying, which Bobby alludes to in the narrative of the report here, that spiked a lot of demand on essentials and a lot of heavy volume grocery type products, right? That's really what we saw. What was interesting to me was, and I guess I'll pose a question back, Bobby, to you, is it didn't fall off as much as I expected. And I wonder if that is, and Lee may have this same question, or maybe you even have a thought on this, and that is that because we didn't really see demand start to collapse until the second half of March? Is that why we don't see greater downturn in these numbers? I guess I was expecting that, and I think a lot of us probably were.
Well, there's two likely reasons. One is the fact that because of the stockpiling, as you stated, that began ahead of the stay-at-home orders, and not only the stockpiling of household goods, essential household goods, but also the medical equipment, and personal protection equipment. Those things drove surge, drove a lot of the marketplace. The theme running through this quarter's index is, even though those things were at record highs, it wasn't enough to balance out, for lack of a way to put it, the downside. The closing, the idles, all of that is what dragged it down. So to your point, it didn't, one kept the other from going, completely through the floor. But as we also state too, Q2 2020 is expected to be very challenging, because those impacts are going to ripple through that quarter and be more realized than what started on the tail end of Q1.
Yeah, we saw now there's so much product back on the shelves that those shipments are going to slow down. And I've heard, I think the word plummet was used in this analysis, and I've also heard the word plummet from other people, and I think that's kind of what we can expect from demand. Lee, you have any thoughts on that?
Yeah, most of the economy shut down. So outside of you and I going to the grocery store and loading up on supplies for a week, there's really not much economic activity. Old Dominion, really large LTL carrier, they had their earnings earlier this morning. They announced, and they were talking about their shipments being down around 20% in April. That's a lot. Knight-Swift, which is a truckload provider, they mentioned that their April numbers are down in terms of loads, down mid to high single digits. You look at the rail volumes. That especially the intermodal, which I guess is a little more truck competitive, a little more consumer driven. That's down around 17% for the quarter. So there's a lot of things, bad things going on in the freight world that is, going to have a ripple effect on how these companies do in the second quarter and the third and fourth quarter for that matter. Not everyone is going to emerge from this alive from a company standpoint. Not to be flippant, but a lot of companies, smaller companies that don't have the liquidity, are not going to be able to survive. The deleveraging effect of the reduced amount of demand that's out there.
Well, and they came off a tough year to begin with.
Right. That's right.
2019 was a crusher.
That's right. Historical. All right. So before we dive deeper into the regional side, we got a couple questions from the audience, and the first question comes from Patrick. Patrick asks, and Bobby, will direct it to you first. Do you think the new farm bill will help truckers deliver produce to food bank centers throughout the USA? A lot of this produce is donated food from the grower that can't pay freight. Any insights around that?
It's expected to help, but I can't quantify any percentages by how much. But anything that gets it off of the farm and out into the marketplace has got to benefit in some fashion. Yep.
And before we pose that same question to Lee, quick observation from Claudia, because we heard this directly from Kathy Fulton yesterday, who's with executive director of the American Logistics Aid Network, which does a great job leveraging corporate supply chains to address disaster response. And she talked about how we're getting uneven policy implementation. So the truck drivers are driving through one state or even one county, and they've got different restrictions, different expectations, and that's going to factor into how we move forward from here. So Lee, same question. The Farm Bill. What is your quick take on how that can help us out and certainly help out the truck drivers in the food industry?
Sure. So I'd probably echo what Bobby said on the margin. It's a positive, but it's probably not going to move the needle in terms of absorbing all the slack capacity that's currently in the truckload market. So just incremental positive that unfortunately is not going to move the needle.
Yep.
Tears in a bucket, unfortunately.
That's a sad metaphor.
So
I do have a thought on the numbers here, and we saw some inversions where shipments moved more than pricing, and in some cases down. And I'm curious, Bobby, if you feel like or found that was an effect of rates already having been compressed from 2019 and particularly Q4, because I see some numbers, and we're going to talk about the specific numbers in some of the regions where that occurred. Do you guys analyze whether that was an impact based on rate compression?
Yeah, part of it's the rates. There are stories of carriers that will go and negotiate with shippers just to be able to get freight moving. Fuel prices is a big impact as well. The fact that fuel prices and hence fuel surcharges are down means that you could be moving more shipments, but the costs are going to be a little bit lower.
So on that note, and based on Daniel Stanton's comment, we're going to segue right into regional takeaways. Daniel mentions on LinkedIn, I thought it was really interesting that the Southeast seemed to respond faster and better than the other regions. Southeast, our Supply Chain Now folks will probably call that the supply chain city effect. I like that, Daniel. He's referencing the moniker for what Atlanta refers to as supply chain city. So let's pivot a little bit here, Bobby. Let's dive into, I think we've got our regional overview charts teed up. Starting with the Southeast, which of course Daniel Stanton right on time kind of segued us into. What's one key takeaway from the Q1 Freight Payment Index about the Southeastern region?
Basically, that the Southeast, according to our index, was the only region to have true positive growth in both indexes, and that's likely from a couple of factors. One was the fact that their supply chains are more resilient, having to deal with multiple disasters and being able to and the experience in responding and changing it up quickly. And the other one perhaps is due to the fact that the stay-at-home orders went into effect a lot later, if at all, in the Southeast compared to the other regions. And then one other factor is a large amount of backhaul traffic out of the Southeast. And so, freight is able to move in and out more readily than some of the other regions that tend to pull more freight in than they push out for various reasons.
Good stuff there. Lee, do you want to weigh in on what we saw in the data from a Southeastern standpoint?
Yeah, again, I'd probably echo, what Bobby just said, especially the stay-at-home orders, the Southeast, a lot of the states were very slow to implement those. And, the West Coast and the Northeast were kind of a lot quicker, I guess, if you will, to pull the trigger and demand that people stay at home to try to flatten the curve. So I think that probably had a lot to do with it. Not to mention that a lot of supplies that maybe we were loading up on came from the Southeast and the Midwest in terms of our canned goods and other consumable products that we buy in the grocery store. So I think maybe those two things probably had the biggest impact from just looking at the data and not knowing the data as intimately as Bobby does.
Yep. And Greg, right before we get you to weigh in on Southeast, quick comment from Claudia. She asked if the slides are available. And by the way, Claudia says your information is awesome, Bobby. So love that. And Claudia, and to our audience, yes, it's available. In fact, we've got a link to subscribe and download the full PDF report in the show notes of each of the live stream platforms that we're currently broadcasting against: Facebook, LinkedIn, YouTube, Twitter, and Twitch. So Greg, and great question, Claudia. Greg, your take on the Southeast real quick.
I think there are a couple of additional factors in addition to what Bobby and Lee talked about. One is there has been a significant shift of goods, even from China, from West Coast ports to East Coast ports, and we continue to see that because the West Coast ports are pretty jammed up, remain remarkably inefficient, and the additional travel time of those ships to get to the East Coast, put those goods on land just a little bit later than they would have landed on the West Coast anyway. So that has probably some at least incremental effect.
Yep. What's interesting is also, as I think one of y'all alluded to, what's cited in the report is the Southeast typical response to disasters and hurricanes, which of course are notorious in the Southeast in particular. What's interesting, though, what a lot of questions we get, I don't know about you, Bobby and Lee, is a lot of times, as we all know, the natural disasters are located and affect one particular geographic region. So, global supply chains or even, regional supply chains can make adjustments, inventory or transportation or you name it. With something like COVID-19 that's impacting the globe and the supply chain industry on a whole, that really illustrates the uniqueness about this threat we've been facing, right, Bobby?
It's unique in that regard, but again, it's not the same as a hurricane, obviously, but in the initial impacts, again, the resiliency and the adaptability of the supply chains are what have helped the Southeast, because a lot, at least in Q1, a lot of the shortages were not due to nothing being available. It's due to the stress on the supply chains, the ability to move the sudden, new quantities needed in various places. And that's where the adaptability of the supply chain, how do you reconfigure, how do you, reconstitute across market sectors to get, change it over from one type of freight to another quickly and move it to where it needs to be.
Yep.
That's the problem. That's the challenge that we had in Q1. Now going into Q2, to your point, once the full impacts of COVID are felt on the marketplace, and you're going to see different stressors on the supply chain, and that'll take, kind of move it more in the direction that you were talking about, where we'll feel the unique challenges more so. But right now, as a natural disaster and where things are needed to move quickly, the Southeast is more resilient in that fashion. It's proven itself that.
Not insignificant also that we have paper plants all up and down the East Coast of the Southeast as well, right? And paper was a huge portion of what was being shipped.
Great point. All right, so we're going to move into the Northeast region next. Again, just the key takeaways from the data there to our audience. So whether you're tuned in on LinkedIn or Twitter or Facebook or YouTube or Twitch, tell us what you're seeing in the freight market. We'd love to share your observations with this expert panel we've assembled. Okay, so Bobby, let's go into the Northeast. What was some of the things you were seeing there? Some of your a key takeaway or two from that region?
Well, again, freight surges for essentials was not enough to offset weaknesses elsewhere in the Northeast markets. And Northeast is, I won't say notorious, but is more impacted by having more inbound freight than for food and other consumer staples, but less outbound freight. And because of the lowered shipments in general, it hurt carrier revenues. And the expectation is that we'll continue to see lower freight levels into the second quarter as the business closures and basically the full impacts of the virus hit. Definitely impact the Northeast.
Yep. Lee.
Yeah, and again, I'd probably echo what Bobby said. Also, some people had concerns about going into New York or Philadelphia for concerns of not being able to bring a load to the next stop because COVID-19, the breakout was kind of highly concentrated in New York City and on the West Coast, and so people I think we were concerned about if a trucker went in there, would he be able to come back out and deliver the next load, or would shippers say like, oh, you were in New York, we don't want you. So we did hear anecdotal comments from panel checks that some truckers were just avoiding the area altogether.
We saw plenty of the reports of that as well. Greg, quick take on the Northeast before we move right along.
Yeah, I would just echo what Bobby and Lee have said. I mean, the Northeast is pretty straightforward to analyze from that standpoint.
Yep. Okay, so real quick question here from Claudia. She asked, do you see any dry vans as temporary storage of some inventory that can't be stored in warehouses? Clearly, we're seeing, in a somewhat related aside, we're seeing super tankers are all the rage right now as we're looking to store crude. And it's amazing, as reported in the Wall Street Journal, I think yesterday, the daily freight rates from $10,000 a day to $150,000 a day. So if you drive or own one of the 815 super tankers out there, this is a good time for you, I guess. But let's talk about how we're using dry vans as temporary storage. Have y'all seen any of that, and is it meaningful, Bobby or Lee?
I have not seen that. That doesn't mean that it doesn't occur. Just my data doesn't show it yet.
Yeah,
yep.
It's not movement, right? So,
all right. So let's talk about the Midwest. So Bobby, starting with the Midwest, anything different than some of the general dynamics that we've identified?
The agricultural sector is bearing the brunt of lower exports because of they're reduced, but there's still ongoing trade wars with China, and they're also being hit on the factory sector and their proximity to the West Coast. There's a lot of trade that takes place, a lot of freight that moves between the West and the Midwest regions. And so, what impacts the West, can tend to affect the Western side of the Midwest region. And then there's increased activity in spot markets as carriers challenged on the agricultural side are looking for additional freight. But again, they also are part of the trend where there's an upsurge in, moving of essentials. You're going to find that that's the theme of this quarter's index, but it wasn't enough to offset the weaknesses as was with the other regions.
Lee, the Midwest?
Again, I sound like a broken record, but I think I would echo what Bobby said. We look at data. We're really looking at it from a national standpoint. Just given that most of the companies that we cover have national footprints, so the put and takes from each region kind of wash out to get more of a national picture, which is what we focus on. Gotcha. But again, I think the comments from Bobby are probably right on.
All right, So, Greg, I know you got some roots there in the Midwest in the great city of Wichita, Kansas, and you may echo exactly what Bobby and Lee have shared. But having lived in the great city of Wichita, any localized information or insights you might share?
You just want to give me a chance to sound off on the Midwest, which I really, really appreciate. I can tell you that Kansas City, Springfield, Missouri, all have a significant chunk of short haul and long haul carriers, and I know that the business is down pretty substantially for them, and the cause is because, again, even if we're trying to move goods as opposed to waste, move produce as opposed to waste produce, that it's not enough to offset the rest of the downturn. And additionally, because so many meat processing facilities are in the Midwest, and that is way down as well. That's having a big impact.
Yeah, that's a situation that we've been keeping our eye on for several weeks now. And I think earlier today, I didn't have time to take a deep dive into the article, but the inspectors are starting to get impacted in the meat packing and the processing plants. So we'll keep our eye on that. Hey, real quick aside, Jarrell, who is a business leader in one of the food retailers, has a comment. So he says, we're witnessing warehouses clear inventory out to stores as a means to clear space at the warehouse. And at the same time, the shortage of drivers is playing a bit into the freight market. He also says that he and the team, and I'm not going to mention the company, you can see that on the stream on LinkedIn, but they're weathering the storm for each of us. So we got to love on all the folks that play a part in the end-to-end supply chain, whether you're in operations or warehouses or manufacturing, or as Greg, as we like to point out, the folks that are stocking the shelves and making sure these stores don't close, right?
Yeah. If you're running a register, you're on the front lines.
That's right. Yep. So really appreciate what you're doing, Jarrell. Okay. So, rather, as I'm learning, it takes me a little while sometimes. I'm a slow learner. Let's conclude our regional wrap.
Really interesting regions too.
All right. Well, let's combine the Southeast and the West, right? Rather than taking one by one. I'm sure we'll see some overlap in terms of what your observations are in the data. But Bobby, let's talk about the Southwest and the West regions.
Southwest is affected by oil prices. A lot of oil. Energy producing shippers and operators that are closely tied to that industry in the Southwest. And so the fact that oil is literally tanking, affected.
Oh, I got to give you props on that one, Bobby.
But the fact that energy producers are being hit by dropping oil prices, it's impacting their carriers as well. But basically, they're suffering from lower volumes, lower fuel surcharges, and softening pricing, I think, as Lee had mentioned previously. And then the West, again, impacted by trade wars. It was the first region to be hit by COVID-19 issues. That hurt truck freight, it started earlier in the quarter. And then when the Chinese economy shut down, that affected the ports as well. So, but the West, had the first wave, the first hits from COVID. So they're suffering, and because those two regions are connected in some fashion, they're hurting.
Yep. And Lee, I'm scared to ask you, but I know you echo, I imagine, a lot. I'm getting better at my predictive analytics. You're going to echo some of what Bobby shared, but anything else stand out?
Well, I'll talk about something different. Like, in the Southwest, that number is going to probably get a lot worse because of the increase in stay-at-home, coupled with the fact that, crude is trading below $20 a barrel. So people aren't going to be, the horizontal drillers are going to have a real tough time from an economic standpoint of pulling that oil out of the ground. It just doesn't make sense. So, all the truckers that were driving, frac sand, water, chemicals back and forth to the wells, there's going to be a lot less loads there. So, and that's obviously going to have a ripple effect for the regional economy. As goes the energy market, so does the Gulf region, part of the country in terms of their economy.
Good point. And Greg, anything else stick out to you?
oil is key. I wonder if Lee, oil had gone about $40 a barrel negative. Where I haven't looked lately. Where does it stand now? Is it? I mean, people were literally paying people to take the oil and cart it away. I guess. Here's why that's important. My thought at the time was some struggling trucking company should go get paid $40 a barrel to haul it away, find a super tanker and store it, and perhaps boost their opportunity to earn if that still exists. Is that happening?
The problem with that is really no that much storage available onshore, and then offshore, the amount of capacity that's been sucked up from floating storage on large VLCCs that can handle 2 million barrels of oil, those rates have skyrocketed. And so, there's still, speculation ability between buying it now, holding it, and maybe selling it down the road. But because of where rates are going, that margin is kind of shrinking.
Yep. So quick aside here, a comment from Daniel that he's heard today that there are East Coast ports starting to shut down because of low demand. Lee, Bobby, have you all seen any of the similar reports of that happening?
I have not seen that yet. I know most ports are still operational because they're considered essential. And at the end of the day, people don't have to work closely next to each other because you're in a machine alone, typically. But I haven't heard that as of yet.
Okay.
And I have not either. We're tracking some data regarding by region, not necessarily specifically at the ports. And even into April, the southeast and northeast regions are down, a couple percent.
Gotcha. And Greg, what about the Cracker Jack Supply Chain Now research team? Have we heard anything of the East Coast ports going down because of low demand?
I know that they had slowed pretty substantially, but I haven't seen any breaking news on that. We'll have to get with Malcolm.
That's right. Okay, so we're going to switch gears. We've been going region by region, going through all the data of the Q1 Freight Payment Index, which U.S. Bank and Bobby and his team puts out 4 times a year. Bobby, we're going to shift gears here. What we'd like to do, you can answer both of these questions, or you can pick your favorite question to answer. Your biggest single takeaway from the Q1 report, or what to expect. And everyone's crystal ball, some of them are not. If yours is like mine, is not working at all right now. So, what to expect in Q2 or the remainder of the year? What say you?
Well, we expect largely because of the predictions of the GDP and again the impacts of the virus that Q2 is going to continue to drop. Ideally, and I'm not forecasting anything, I'm just saying ideally Q3, once the openings start to occur, will mitigate some of the full impacts of that, and we'll start to see things climb in Q3, at least by Q4. But Q2 is definitely going to be off the charts right now as far as where it's going. Mute.
Either. I'll tell you what.
Professional folks do not try this at home.
So, Lee, same question for you. Either biggest takeaway from what this report has shared, or what to look for moving forward.
Sure. I mean, I think we'll look back at this report from like 12 months from now and look on the data pretty fondly because it looks like it's probably going to be a peak in terms of demand and rates. From our standpoint, things are collapsing. Things are getting bad in the second quarter. A lot of people are becoming unemployed. That's going to have ripple effects for demand. That's going to have ripple effects for freight demand. And that's obviously going to weigh heavily on these numbers going forward. So, that's the thing that we think about, when looking at this, that, this might be the peak of 2020.
Mm-hmm. Okay, Greg, your same question to you.
Yeah. Volumes are down 8 to 10% from early February, just in April so far. And spot quotes, to quote somebody, are at unprecedented lows. We have to slip unprecedented into any discussion around COVID-19 and this seismic societal disruption.
That's right.
I can't say that the worst is yet to come, but worse than where we are is yet to come.
Yep. Sure. Hey, going back to the ports in the East Coast, we were talking about them potentially being idled. JOC is reporting that the Port of Virginia is going to idle the terminal and suspend container operations in the Portsmouth Marine Terminal beginning May 3rd due to COVID-19 volume drop. So we'll see if other ports follow suit. Okay. So as we start to wrap up, Bobby, I tell you, I'm not envious of you and your team and the job they've got to do, pulling all these data points together to share these insights. But let's make sure folks know how to compare, reach out to you and connect with you, as well as sign up for the Q2 freight payment index that U.S. Bank puts out.
That's at freight.usbank.com. And again, just fill out the form and it'll be sent to you automatically on every quarterly publishing day.
Outstanding. And again, as we shared earlier, that sign up link, we may try to make things easy for you, is in the show notes of each of the live streams here. Lee, appreciate you coming back. You and Bobby both repeat guests now. Let's make sure folks know how to connect with you and certainly keep their finger on the pulse of all the things that Bloomberg Intelligence is up to.
Sure. Well, most of our research that we do primarily goes across the Bloomberg terminal, but I am on LinkedIn. Spelling of my last name. Oh, the wrong way.
I know, it's hard. You're looking in the mirror.
Right there. There it is. That's the spelling of my last name, all about meeting new people and getting smarter from industry professionals. And I do smatter LinkedIn with some of our research as well. So, feel free to connect with me on LinkedIn.
Really appreciate it. Your supply chain IQ will certainly increase if you follow Bobby or Lee across social media and check out their research. All right.
He's also on LinkedIn. You can reach out to him.
That's right.
And that's
all right.
I can't get my hand down there to point at his name.
So, Greg, a lot of information. I really appreciate how Bobby and the Freight Payment Index boils down all these data points into some really practical and executive level insights, right?
Yeah, it is. I mean, it's a fantastic bit of analysis based on a huge amount of data, and good, I think, to bring it to the industry. Bad news this time around. I feel like when I talk to one of my cousins who's a meteorologist, I want him to influence the weather, and I wish Bobby somehow could influence transportation, transportation movement, but we know we can't, and we know we've got tough things to come. But I got to tell you, this isn't as bad as I actually thought it was going to be. So I don't know if there's any good news here. It's just news at this point, right?
Great. Well put. All right. So I'm going to surprise y'all with one final question that's a little bit outside of the Freight Payment Index. Before we went on,
guys.
What's that?
I said, you've been doing this lately.
Well, right as we were coming on, we learned something about Bobby that we didn't know, that he is a voracious reader, right? When he's not providing cutting edge insights that helps supply chain leaders make decisions, he's reading a lot of books. So I want to pose this question to you. Either what's your most recent read that you would recommend, or what is your go-to resource that when you're drinking your cup of coffee at 4:30 in the morning, your first cup of coffee, that you check online or get your insights from. So Bobby, you're telling us about a recent read. What's been one of your recent favorite reads?
My recent favorite reads, I think it was one of my books on Tableau.
Okay. So
Tableau.
For data.
A lot about you, Bobby.
So you're taking the challenge to professionally develop yourself during this quarantine very seriously. Okay, man. All right. So Lee, same question to you. So what's a go-to resource or a great recent read?
Well, of course, it's Bloomberg.com. I mean,
right, of course.
My news and information. But yeah, I haven't read a book in a long time. I think the last one was Switchpoint, which was about precision scheduled railroading.
PRS.
Yeah, that's
PSR.
as I get. Part of my job is I read all day, so when I want to relax, it's not usually not curling up with a good book. It's usually having a cocktail. And yeah.
I understand and can relate. Okay, Greg, same question.
I happen to have it right here. So I think on a show a couple of weeks ago, I confessed that I don't read much, and Peter Heflin, friend of mine that has worked with me at a couple of my companies, suggested that I read this book, Culture Code. I've just started it, but so far it's a really good read. The Secrets of Highly Successful Groups, team building book. So so far, so good.
Outstanding. Good stuff.
Sunday funnies, but there aren't any.
All right. Well, we got to thank our guests. I really appreciate y'all's time here today. We've been chatting with Bobby Holland, Vice President and Group Product Manager and Director of Consulting Services at U.S. Bank. Thanks so much, Bobby. Good to see you. We'll see you next time for the Q2 report. We've also been talking and getting the insights analysis from Lee Klaskow, Senior Analyst, Transportation and Logistics with Bloomberg Intelligence. Thanks so much, Lee.
Thanks, Scott and Greg, and all be safe and healthy.
Absolutely.
Yeah.
And keep our finger off the mute button, right?
That's right.
All right. So, Greg, great show here today as we wrap up. Really appreciate, the content engine keeps churning here, but this is really good information, informed, data-driven content from the experts that know. That's in demand right now, and it's proven in a variety of different levels, and that's what the last hour has felt like to me.
You'd be hard pressed to find two people more knowledgeable on the transportation industry.
Agreed.
Right? And I really appreciate both of your time. Bobby, you put in so much time into this thing, but I feel like that book on Tableau, you can learn some shortcuts that'll help you save maybe an extra couple hours.
Ooh, boy. All right. So to our audience, thanks so much for the engagement and the questions and the comments. Be sure to check out a wide variety of thought leadership resources at supplychainradio.com, including other episodes featuring Lee and Bobby. Find us and subscribe. If you listen to podcasts, you can find us and subscribe wherever you get your podcasts from. We want to wish you, on behalf of the entire team here, stay safe. Brighter days absolutely lie ahead, even if we're not exactly sure when. They'll be right around the corner, and we will see you next time here on Supply Chain Now. Thanks, everybody.
Thank you.